Hey guys, today is October the 2nd of 2022, and I want to go over the Nifty 50. UGW again, price and time, technical analysis. So without any further delay, let's get into it. I'm using data from 2009 to current prices on the Nifty 50, and mind you, this is the weekly chart. So there are three important cycles here. One is the 196, which is the strongest in regards to Bartel. You can see that that cycle has a good correlation, and it's already pointing down all the way to 2023. The next strong cycle here is the 331. You can see that we already hit a peak somewhere around August, September. The last one is the 116. And this one is bottoming out. This is the one that's the oddball. And then it's going up. So the question is, out of these three, which one is the one that's going to play out? Are we going to just kind of go a little lower here and then continue going higher into 2023 of November? Or are we going to go down with the other two? This is a composite of both of them. That remains to be seen. Dominant cycle on the weekly chart is 34. You can see that this is a little more fractal in nature. And it's not perfect, but you see how, the cycles go up and down, and Nifty 50 is doing its thing. Well, right now it's bottoming out in October the 17th around there, and then it goes up to February of 2023. You take that 34 dominant cycle, do a composite of the 116, not the 116, the 196, and you get a good correlation. It's pretty good using those two as a composite. So we'll see how this is all going to play out. But the most important thing is that out of the three cycles I showed you, two are pointing down. One is about to bottom out. Now we're going to go to the daily chart and see what the daily chart is saying. Okay, I wanted to show you something that you should be aware of. When I did my last video, I believe I did use data from 2019 to current prices. Because for some reason I was saying that October would be a possible, the cycle peaks on October. I went looking back to see, and there's two cycles here that are strong. One is the 248, it peaks in November. And the other one is the 137, and it peaks in October, and that's why I was saying October would be a possible cycle top. The problem I have with this analysis looking back now is that I'm only using data from 2019, which is pretty short. It maybe is not ideal. Correlation is not even good, although here it looks pretty good. So you never know. I mean, it all in the eyes of the beholder. Let's see what's going to play out. But I just wanted to show you why I kept saying October, November, or maybe both, or maybe more leaning on October because of the 137 cycle, which is this one right here. So you do a composite of those two, and the correlation gets to 0.56. So be cautious, because what I want to show you is the most important question right now is, what are we going to do in October? Are we going to push higher? Over here we made a high on October the 18th. So are we going to make a high in October and then go down? Or are we just going to start going down now? That's the question as of right now. So those are the two things I wanted to show you on this. So now I'm going to show you another clip using more data on the daily to kind of see what are the possible outcomes into the future, what the other cycles are saying with a bigger data set. Okay, so this is the daily chart, and ideally, I like to use more than 5 years on the daily chart. On the weekly, more than 10 is good for me. But on the daily, if I have less than 5, I feel like it might not be as accurate or close to accurate. Well, I'm not going to get, pretty much good results. But anything over 5 years, I feel a little more comfortable with some of the probabilities that it shows. And that's just because, we've experienced doing this for a while. I just kind of picked up on those little nuances. So I'm using data from June of 2013 on the daily chart. You see that it gives me a little more better data to work with when I have more years. 5 is good for the daily. So there's 3 here, the 259, and mind you, all of these, the correlation is not good. So just bear with that. But you can see that here it picked a low. This one is showing that it's going up to November of 2022. So 259 cycle is going up. The 220 cycle is about to peak right now in October. And the 167 just peaked in September. So if we take the 259, the 220, and the 167 and do a composite, the correlation is not great at all either. You see that we hit a peak somewhere around October. Take the 167 out, and somewhere around November hits a peak. Now there is a dominant cycle here, which is a 137, but as close as I could get would be the 135 by itself. And you can see that we're hitting a peak somewhere around October 1st. So that's that. Take it as you may. So the question remains still, are we going to push lower, or is October a strong month? And now we're going to push higher, hit a peak, or maybe even November, and then turn. So I want to show you what the cycles are saying. Now we're going to go into a seasonality and see what the seasons are. Seasonality charts are saying in regards to October and November. Okay, so this is a seasonality chart of the Nifty 50, percent of months in which Nifty closed higher than it opened from 2018 to 2022. So looking at the 5-year, you see that September is a little weaker, below 50%. But October, November, and December are pretty strong. So keep that in mind using a 5-year data set. You go to 10-year, you see that October is pretty strong. So October could potentially push higher. November is a little weaker, but not by much. And then December is a little stronger than November. But keep that in mind. 2013 to 2022. We'll squeeze in 15 and see what 15 looks like. And October is still strong, and December is still strong. November is a little weak. Then the max I could go is 20 years. You can see that October is a little stronger. November is a little flat. And December is stronger. So you see that we have the potential using, this model data set, potentially to push higher and make a high in October. So now looking back at the video clips I showed you, the weeklies are down, but then the dailies are showing potential for a swing high. So it could potentially push higher. But just keep that in mind, that these are the little things you got to kind of pick up on using the cycles and the seasonalities. We'll go to the next clip now. Okay, so this is a Nifty 51 month, and you can see that we're still in a buy zone on the monthly chart. Even though we had a MACD crossover, you can see that we've been going sideways since October of 2021. So October doesn't make sense for making it a swing peak high, because it just did it in October the 14th. And these are the trend lines right here that you want to watch. And there's a big trend line from October high going across and we're having a tough time fighting that here as of right now. So I just want to go from like the big picture down. Now we're going to go to the the weekly. And we're going to zoom out a little bit. And then I'm going to focus in on what I want to see. And this white sine wave cycle here is just to let me know that the weeklies are down. It's just kind of a reminder. When I see that, it might not be exactly perfect, but I just know with the weekly data set that it's a reminder that the weeklies are down every time I look at this chart. You can see that we pivot here, trend line. We never kissed it yet on this pullback. And then there's this big trend line coming across that's important. And you can see that there's the supply and the demand zone. And we've just been kind of making, lower highs and lower lows. But here we just kind of stalled and went up. Now we're going to go into the daily and we're going to narrow into the battleground. This is the battleground right here. This is what the fight is between the bulls and the bears. So this is where I want to focus my attention here. So October 14, remember that date? 18, sorry. I said 14, it was 18. We made a high and then just kind of went sideways. That's that trend line, this red line. We peaked above it, below it, then peaked above it, and now we're below it. You got to keep an eye on that trend line. Now there's this big one over here that we never got to kiss that goes all the way down to the pandemic. And then this trend line right here that now we're below it. We failed it, but there's going to be different trend lines going up. Now, just using this range, we found support at the 50% right here. We got this nice bull kicker looking like it may want to continue going higher now that it pulled back and reset. Now it may want to push higher, which would make sense, October being one of the strong months going up. Dates that I use using one against technique, keep an eye on the 6th and keep an eye on the 24th. Those 2 days, 26th and the 24th. Yep. So keep an eye on that and see if we're gonna push higher. If we are, we may want to penetrate the supply zone depending how strong it is, and push into it. Now, if it's gonna be weak, these could possibly be turning points, but I don't know. But I just wanted to put them there. Maybe it could go high, and then on the 24th, turn. Or this could be one of those things where it pushes lower and then finds support and then bounces up. I don't know. It all depends on the price action. But looking at the way we closed Friday, it looks like maybe buyers are stepping in and maybe want to push this higher. You got this trend line coming down. So we'll see how that's going to play out. We'll go to the next clip. Okay, so this is my Elliott wave chart, and I wanted to show you some things. Big picture stuff. According to the chart program, it says this is wave 2. This is a big wave 3. If this is not wave 3 could be potentially all the way to 27,981. It's saying that if this is a monthly chart, that if this is wave 3, we could push down for wave 4, 14,667, all the way down to like 12,33 down there. And that wave 5 could potentially end around 30,89, or even 4107. So this is big picture stuff. Just wanted to show you in regards to time frames. It's a beautiful chart. You can see that it's trending higher. It's chugging along above the 20, the 50, the 100, the 200 SMA on the monthly, looking beautiful. Going to the weekly, you can see that here, this is the pandemic. We did an ABC correction. 1, 2, 3. Pull the 4 now. Still above the 200. Bounced off the 100 SMA. And now it looks like it's potentially working a wave 5. Wave 5 targets could be anywhere 2120 all the way to 2491. Well, this looks good. in the backdrop of knowing that the weekly cycles are pointing down. So could we hit a wave 5? Yeah. And then maybe slam down. That could work. That happened. I've seen it. It's not that it could work. I've seen it in the past on other instruments. So that's a probability. So the potential of going higher using Elliott wave, yeah. We need to finish wave 5 if that's going to play out. So just keep that in mind. Let's go to the daily chart. In the daily chart, you see that it's a little messy. It's a little choppy. This is wave 3, 4, 5, ABC, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 down, 1, 2, 3. Now we just did 4. It makes sense to go high, go strong in October. So potential targets over here, Elliott wave, would be, if it's going to go high, 1837 all the way to 1937, 36, around there. It's chopping around here. Let's put some targets also here. This is a possible target. 1829, 1842, and then this whole area right here from 1855. This is separate from Elliott wave. This is more like geometrical targets. 19, so anywhere between 1914, 1880, all the way to 1855. Anywhere around there. Even wave 5 here. There's a potential wave 5 which lines up with the geometric. That will be the 1829 to 1840. So I could kind of see this October, November move going up here with the daily. While the weeklies are pointing way down, I could see this thing push up there. And then once we get to October, November, the question remains, what's going to happen next? Are we going to correct? I'll continue pushing higher. So we'll take it, one step at a time. Let's open this up a little more. Let's see what we got going on here. The one technique I use is called the ellipse technique. And you can see that right here at the end of the ellipse, it's either, on the day or the next day. There's always this big increase of volatility in regards to price action. If you look at it really good, you see you got this nice little bull kicker candle. Boom. The next one will be somewhere around 10.6, which lines up right there. It'll be interesting to see if it kind of goes up and then pulls back. And then somewhere around the 6, boom, it gets another momentum push higher. Now we got to break around this trend line or linear regression channel. And your target will probably be 1741 for the quick scalpers. And once it closes above the 20, then it's going to try to penetrate the supply zone on that. If there's anything else I want to show you here. I got one more clip and then I'll be over with this video. Let's see, this looks like something I did here to do some research. Maybe I should go to the weekly chart, make it look bigger. There we go. Okay, so with this move up here and this retrace, there's a 61.8 target of 2207. So yeah, once we close above this October, it was 18 high, 1858, then we can start looking for price, levels up here. But as of right now, we're having a tough time trying to close higher and penetrate the supply zone. So I just want to give you some targets that there are some levels up there that we could hit that's realistic. The only thing that concerns me is the weeklies. Cycles are pointing down, but price is going to be king and it's going to do what it's going to do. So it's just a game of figuring out what's going to affect the Nifty 50. Is the weekly cycle is going to pull it down no matter what happens? That remains to be seen. I think that's it. We're going to go straight to the master chart and I'm going to show you what I'm seeing there. Okay, so this is my last chart. This is the master chart. And I was blessed with one of my followers on YouTube provided me with data going back all the way to 1990 on the Nifty 50. So this is a very beautiful chart. A lot of information here to dissect. So I'm going to just focus right here in this area right here. Open this up a little bit. So this is the pandemic low, and this is the range, the battle zone I want to focus on. First off, if you do the Fibonacci, it's pretty strong. There hasn't been a really, deep retracement. It's still holding the 23.6%. If you go a little fractal and you use this range right here, it's finding support at the 50%, as I showed you in the other chart. So that's good. And squaring the range from the pandemic low to the October 18 high, you can see that this is a 1/4 level, this is the 1/8, and this is the 1/6, which found support equal to almost like the 50%, 1675. And you see there's open range in regards to angles, but there's some vector points, as Michael S. Jensen calls them. October 13th and also November 6th. You want to keep an eye on. If we go a little more fractal and take the October 18 high to this low right here, you see that this is only 1/4 levels I'm using. We just hit this angle right here. So when you go a little more fractal, there's more angles, and we just pierce through it. So this is an open space. The next level will be the 1774, and then a vector point, which is October 15. You want to keep an eye on. This is a 128. This is a Yuri technique, and there's dates you want to keep an eye on. I'm just kind of focusing on October 23rd. Put that on your marker. That's an important date coming up, using the 128 technique right here. See how that plays out. And then also using the Fourier dates. Let's see, do I have any? There's, I think, 3 here that you want to keep an eye on. I did the Fourier technique a while back, and was amazed how accurate it was. So let's see if it works this time. So we have the 18th, we have November 19th, and December 2nd. You want to keep an eye on using the Fourier technique. I think in regards to that, that's all I wanted to show you there. Let's see if we could close this out. Move this away somewhere over here. So using the spectrum analyzer, you see that this is using a model RSO, relative strengths, and you can see that they're peaking somewhere around this year. One goes even further out. So if you were to do a composite of that, this is what it looks like. So this is bullish. Now, the reason why I'm showing you this, because I'm comparing 2 models. I'm showing you the weekly cycles that I showed you earlier in the beginning, and then this model. So this model is showing bullish. The other one on the weekly is showing bearish, but this is on the daily chart, and it's using a different algorithm. So this one is saying, that maybe we'll peak out somewhere around January, which could be possible. I just wanted to show you that. This is for the bullish mind or trader. Now, the next one here, this is a little more shorter time frame. The one I just showed you was using all the data. This is a little more fractal. And this is this model. And I did a composite. The composite, it was showing that we're probably going to get a bounce all the way up to November. So it all makes sense, October being bullish and everything pushing up. So that makes sense too. And the other one, even further bullish into the year, to 2023. I also ran some computer model, neural net, just to kind of get an edge and see what the computer's seeing. So the computer has a date of like it's somewhere, I think is the 25th, around there, 25th. Yeah. Right there, like the 25th Tuesday, Monday or Tuesday. Keep an eye on that. Because, if it's going to push higher, that could be a possible turning point. And if it's going to push lower, that could also be a possible turning point. Keep an eye on that. That's what the computer's picking up on. What else? There's a few things here. Seasonality. This one's the one that's tricky. This is the one that, it's kind of interesting. Let's see. Let's take this off. So let's break this down a little bit. So the solar cycle is saying that it could possibly bottom out somewhere around October. So you see, this is going against everything else that I've been seeing, that normally on the seasonality, that October is bullish. So this one is kind of bearish. So this one is saying, just in case we don't get a rally in October and it's going to push lower, this could potentially push all the way as low as October the 28th. I just want you to see both views so you kind of have an understanding. Using the annual cycle, which is the blue one, the solar one, I put a yellow. You can see that it's pretty much lining up. Then you compare the annual and the decimal, and you can see that this one pushes even further into November as the low. So these seasonality, you can say natural cycles or seasonality, these are bearish. So this was going against the model I showed you earlier, using the 5, the 10, and the 15 to 20 year. Fast annual, you can see that they're pretty much these annuals, fast annual and mid annual, bottom here. This one peaks out somewhere around October 13th, and this one goes all the way to the end of the month. So you got two, going against the solar annual and the decimal annual. So there's 3 that are bearish, and then there's 2, one that's really bullish, and then one that's kind of, semi-bullish. Let's take all that out, and let's add one against technique, looking 10 years ago and see what the price action was. And 10 years ago, it just kind of went sideways. As of right now, it's October. So nothing really to get a clue or an edge. He also says to check out 20 years ago. And 20 years ago kind of seems like the price action we're kind of having now. And 20 years ago, it bottomed somewhere around October 28th. It kind of makes sense, and then it kind of goes up. So this kind of makes sense on that. So yeah, October is going to be a very interesting month. Could be a capitulation pushing down and then a spike up, or maybe this is it and bulls already getting in ahead. Let's take this out. So to sum it up, what are my thoughts? October is going to be interesting. It could go either way. It could make a swing low and push higher, or it could continue collapsing and going down. But looking at this candle, it gives me a clue that maybe, we haven't had this candle here. We had it here. You can see that sometimes these things happen, and then it stalls and it pushes back. So just be cautious. Remember the dates I gave you and the key levels and everything. But October, if I was to, it's 50-50. I'm not on either camp. I'm not bull or bear. The weekly cycle pointing down is going to be very concerning, interesting to see. It goes against the Elliott waves, because Elliott waves saying that this is a wave 4 and we're going to go wave 5, while the weekly cycles are going down. So that's going to be an interesting, outcome. I'm very curious to see how that's going to play out. Just be cautious. It's trending higher. It's just kind of stalling a little bit here. But if it's going to push higher, with probability, it could, potentially go higher in October. But then there's other things here also that, throws a monkey wrench and, gets a little concerning. Oh, but what about maybe it just continues pushing lower and all the stuff going on in the world and, whatever's happening in India and all that. So I'll leave it up to you, but that's the best I could do in regards to analysis. I'll keep an eye on it, and if I see anything interesting, I'll do another video. But as of right now, this is the update for October. And then when we do one in November, we'll see how October played out. Hopefully you like this video, and I'll keep you posted on my thoughts on the Nifty 50 using double EGAN price and time technical analysis.